Okay, folks, so a key player in the Bitcoin mining industry, CleanSpark CLSK, just broke out of a major resistance level, and it's about to catapult into the limelight over the coming weeks. There's a big catalyst for it coming up, and we need to discuss exactly why this stock is going to start getting a lot more attention. We'll break down what it is, why it's competitive, how far it can climb, and we'll also compare it to some of its competitors like Yes Mara Lovely Mara, which is always a tease. And as always, before today's breakdown, keep in mind you should never buy or sell a stock just because we talk about it in a video. You need to be going off and doing your own due diligence and coming to your own conclusions. Our goal is just to inform you. Also, quick plug, we send out free email reports on key market events and stock breakdowns nearly every single day now via email. Make sure to sign up with that first link down below if you haven't already to receive free ZipTrader reports, and you don't want to miss them. Let's go ahead and dive in and explore CleanSpark CLSK. So they are proudly known as America's Bitcoin miner, at least that's what they self-identify as, and this company has carved out a leading role in the Bitcoin mining landscape with a strong commitment to sustainability and utilizing low carbon energy solutions. Spanning across 9 strategic locations in New York, Georgia, and Mississippi, CleanSpark is revolutionizing the industry with its eco-conscious approach. The heart of its mission lies in harnessing renewable energy sources such as wind, solar, nuclear, and hydro to power its expansive data centers. Now, this forward-thinking strategy not only responds to the global demand for more environmentally friendly crypto mining practices, but also sets a new standard for innovation in a sector often scrutinized for its substantial energy usage. It seems like every other day, some regulator, some politician is calling to shut down crypto mining because it's too environmentally unfriendly. Well, CleanSpark is an answer to that concern. In terms of progress, in 2023, CleanSpark reported significant growth in its Bitcoin mining operations. The company mined 7,391 Bitcoins throughout the year, marking a 60% increase compared to 2022. By the end of December 2023, CleanSpark's Bitcoin holdings had surged over 1,200% to 3,002 BTC, valued at approximately $135 million. And of course, as the price of Bitcoin has gone up, that value has gone up as well. And if you dive into their most recent mining report, it shows that their hash rate grew some 60% in a single month when comparing February 2024 to January 2024. And of course, their next report from March comes out next week on April 1st. Now, folks, remember, hash rates are incredibly central to an investment thesis for any crypto miner. You see, as more and more crypto miners enter the space and the reward from mining Bitcoin goes down, well, only the miners with the highest hash rates are going to win. The hash rate of a mining company's operations directly influences its chances of earning mining rewards. A high hash rate also signifies more efficient mining operations. Aficionado, for a mining company, it is essential to maintain your hash rate because if you don't, you're going to lose out as the network difficulty rises, as the ability to mine Bitcoin becomes more and more difficult. If a company's hash rate doesn't grow in line with the network's, well, its share of the total network hash rate decreases, leading to a lower probability of earning mining rewards at all. And so when it comes to any crypto miner, folks, you got to be paying attention to hash rate. A key achievement for CleanSpark in 2023 was achieving a total hash rate of over 10 exahashes per second, a milestone that few publicly traded Bitcoin mining companies have attained. And just in February, they hit 16 exahashes per second. We'll see next Monday on April 1st if they got that even higher. Maybe they got it to 17 or 18. And the way that they've been able to achieve this is through software optimizations, fleet improvements, and substantial investment into overall infrastructure and hardware. You compare this to some of the other major players like Riot McRiot, it's at 12.4 exahashes per second. Cypher Mining is at 7.4. Mara Lovely Mara, of course, is top dog. She's at 28.7. But with Mara, I think you have a lot of investors and short sellers especially that like to exploit this idea that Mara spends so much money investing in infrastructure that just can't be sustainable, and it's going to take a lot longer for that to pay off. I believe Mara is being held down by short sellers that want to convince investors that investing and doubling down on your business model is a bad thing. But anyways, that's neither here nor there. Mara's been in this situation for years. But anywho, with CLSK, it's much earlier in the process of exponentially scaling up its hash rate, and so that's why markets are much more excited about it right now. And in terms of further growth opportunities and further production increases, CleanSpark plans to purchase and deploy Antminer S21 Bitcoin mining machines in early 2024 and is expected to use that to further increase its total hash rate to more than 20 exahashes per second. And based on how fast they're improving, I guess you're probably going to be at 25 or 30 by the end of the year. But this strategic move now aims to enhance CleanSpark's efficiency and capacity in preparation for the upcoming Bitcoin halving, demonstrating the company's very proactive approach to scaling and optimizing its mining operations. Okay, let's go ahead and talk financial health. So as we mentioned, the company has been focused on improving the efficiency of its mining equipment and facilities, and this has paid off with significant revenue growth. For example, CleanSpark reported a 160 65% increase year over year in revenue at the last report in December 2023. Now, you got to remember that that was before the bulk of the crypto run even happened, and they were already seeing 165% revenue growth, income growth at 189%, diluted EPS 131%, net profit margin 133%, operating income 201%. All pretty substantial increases. And of course, they beat by a long shot what analysts had expected on earnings per share. They beat it by 157%. So analysts have been really shining on this company, and they are getting their rear ends handed to them. CleanSpark also has a strong financial position with significant assets, including cash and Bitcoin holdings. As of the end of 2023, the company's total assets stood at $862.7 million with a robust working capital position. I'm assuming that their overall assets are well over $1 billion now because of Bitcoin's price increase, but we'll see at the next report. However, this strong financial base provides CleanSpark with a lot of liquidity and stability needed to navigate various market conditions, especially in preparation for events like this Bitcoin halving, which can affect mining rewards and profitability by a lot. Now, I want to talk about CleanSpark's risk management strategy. A lot of people overlook management styles when it comes to crypto miners, but a lot of the business's success depends on this. Oftentimes, the difference between a successful miner and a failed miner isn't just the production capacity, but how they manage themselves during bull and bearish periods. In terms of CleanSpark, they manage their Bitcoin holdings very actively, deciding on holding or selling based on market conditions to maximize profits and minimize losses. They work a little bit like a hedge fund in this way, in the sense that they trade based on price fluctuations and what makes the most sense. Their strategy includes a systematic approach to liquidating a portion of mined Bitcoin to cover operational costs while holding the rest as an investment for potential appreciation. Now, here's another interesting point. CleanSpark's focus on low carbon energy sources not only positions it as an environmentally responsible miner, but also reduces its exposure to fluctuations in fossil fuel prices. By using renewable energy sources such as solar, wind, hydro, and nuclear, the company secures more stable and potentially lower energy costs. CleanSpark also likes to locate its mining operations in areas with access to low cost and renewable energy. This geographical diversification strategy not only reduces energy costs, but also mitigates the risk of depending on a single energy market or regulatory environment. They're also big on partnerships, and by forming partnerships with leading hardware suppliers and technology firms, CleanSpark ensures that it stays at the forefront of mining technology, enabling rapid scaling of operations with the latest and most efficient equipment, which quite frankly, I mean, we've seen a lot of crypto miners struggle to acquire the needed equipment to step up their hash rate. Well, that game is won with good partnerships on an ongoing basis. The other point that I want to make is that CleanSpark always maintains a strong balance sheet, and that allows significant capital reserves for CleanSpark, the spark of the clean, to weather periods of low Bitcoin prices or high operational costs. This creates a lot of financial resilience, which I love to see in crypto mining. Now, that being said, I think CleanSpark has some other options should a crypto winter happen. Beyond mining, I mean, the company could certainly further explore providing blockchain-related services, leveraging its expertise in energy management and microgrids, where they could offer, consulting or whatever it is to technology companies that need to know more about how can we provide more energy-efficient data centers, how can we step up our hash rate, so on and so forth. Okay, let's go ahead and move on to the chart. So CLSK absolutely plowed through resistance at $19, then hit just under $24 before breaking that resistance level yesterday. Today, it's been fighting to hold that area and perhaps break out higher. Back in the last crypto bull cycle, we got as high as $42 a share. Keep in mind, back then, there were substantially less shares in the market. We ended 2021 at some 40 million shares. Now we have almost 200 million shares, so the dilution has been substantial. Dilutivo mucho. Now, of course, that money was spent largely investing in infrastructure to grow their business, which is why even before the bulk of the crypto run in the current quarter, Q1 of 2024, you still had CleanSpark reporting impressive numbers. Again, 165% year over year revenue growth, 189% net income growth, 131% diluted EPS growth, 133% increase in profit margin, 201% increase in operating income, and a 204% net change in cash. So the analogy that I would make with this is if you're, say, raising $10 million with new shares, sure, the other shares in the market are going to be pushed down as they're less technically valuable because there's more of them, there's more supply. But technically at the same time, if you're spending that $10 million raised in new infrastructure investments, well, that multiplies your business. So it can, over time, really cancel out the dilutive effects, because you're simply using that money to make a ton more money, and you're not just spending that money. You're investing it. into infrastructure that future shareholders are buying in every single share they purchase. So in other words, today you may be buying a smaller portion of the overall business now than you were buying back then, but there's simply a lot more business now to make up for that. Not only much more revenue, but also a lot more infrastructure, production capacity, so on and so forth. Okay, Charlie, but what are the next catalysts for CLSK? Well, number one, further expansion of their mining capacity. The next mining report and update will be for the month of March and will most likely be coming out April 1st, this coming Monday. Again, the last one reported a 60% hash rate increase in a single month. So we'll get an update to see if they've made more progress towards that 20 exahashes per second rate that they've been planning on. Number two, Bitcoin appreciation. As Bitcoin runs into and after halving, as has been the case historically, well, the assets that CLSK is in the process of mining are going to become more and more valuable, right? Number three, energy costs and sustainability initiatives. Given the energy intensive nature of Bitcoin mining, any further advancements in reducing energy costs or enhancing sustainability could substantially improve profit margins and attract more and more positive attention, which CleanSpark has a history of doing, and I believe will continue to do so. Okay, let's talk about the risks. So CleanSpark's main business is Bitcoin mining, right? Making its revenue highly dependent on the price of Bitcoin. And so when Bitcoin goes into the next crypto winter, well, boom, you'll see CleanSpark head down for its next big crash. That's something that you have to keep in mind when you're playing a stock like CleanSpark. You have to keep in mind that, wait a second, okay, it's running right now because we're in a bull market for Bitcoin, but when Bitcoin decides to go back down into a long crypto winter, well, I'm going to get my rear end handed to me. So that means that I need to make sure that I have a key, concrete, and tight stop loss. The other big risk is dilution. If this company seeks to raise more capital at these heightened prices, it could easily suppress the price for a while. We talked about how in the long run, if the money is used correctly, well, dilution is not a problem. But in the short run, it certainly is a problem. It's certainly a killer of momentum. Also, short sellers, competitor Mara, for example, has been relentlessly shorted by short sellers, and it's gotten to the point where no matter what Mara reports, short sellers just keep shorting, which is essentially having the effect of offering shares onto the market without actually offering shares. Because short sellers, they're selling shares that are already out there, which expands the float. But anyways, that's the rundown on CleanSpark. Yes, it has risks, but right now it's a key momentum stock heading into the Bitcoin halving event, and one that you'll want to make sure that you have atop your radar and you've started your due diligence on. Let us know what you think down below, and we'll see you in the next video. If you appreciated the video, make sure to hit that ravishing like button, subscribe, and we'll see you in the next one.